all the drama that is happening in Greece, the market's in a tizzy right now, giving a leg up to the rest of the globe as well. Where is it all heading? Does it seem like a resolution is pretty near?
In the near term, yes. I think there's a lot of optimism that some kind of deal will be struck. And that, of course, adds to positive sentiment. We see that especially in Europe, in the European markets, but also in the US. So I think there's a bit of a relief rally going on here. This, of course, is not to say that you solve the Greek problem by any means, but if you give it a little bit more time to maybe come up with further proposals, such as debt relief, for instance, that's what the Greeks want, in the future, at least to talk about it, I mean, that's positive, and it shows that there's a tremendous political will within the Eurozone to keep this whole entity together.
Hans, where are you on this good old India versus China comparison? I want to be on India's side, but are you on China's side?
Well, you know, we don't really see that much of a correlation between China and India. China has a lot of momentum. It's going up because retail investors are piling in. Margin debt in China is in the stratosphere, and I think that makes the authorities a little bit nervous. So they would like to let some air out of the balloon without popping the whole bubble. It is, in a way, it is a bubble if you look at the whole participation by retail investors. At the same time, the Chinese government would like to see higher stock prices because you have a lot of debt in the system, especially in state-owned enterprises. And if you have higher stock prices, you can actually pull off a debt for equity swap. So state-owned enterprises will be able to issue equity to pay down debt. And I think that's the long term, but for that they need higher stock prices. India is a different story. India is a 3 to 5 year story, which we think is very appealing to foreign investors. Of course, you guys look at it from a little bit of a short-term perspective, which is normal. But if you look at the whole emerging markets universe, India is extremely well positioned within that space. A lot of it speaks for it. We think there's room for interest rates to go down. Crude oil prices will not go back to $100 anytime soon. So a lot of things are happening, which gives rise to optimism, at least on a 3 to 5 year basis in India.
The other thing is that while it's a moving picture, that sight or a brief sight of a resolution emerging in Greece led to this big uptick in European markets. And I'm sure that had a bit of a rub-off on how some of the Asian markets did as well, particularly India as well. It did not buckle under pressure in the afternoon because the European markets were going strong. Do you think that momentum will continue and keep the momentum going for the other EM pack as well?
It's absolutely possible. I think, of course, it will be felt in Europe first and foremost, but the positive sentiment is going to spill over into other places. But Europe is not the only thing that counts here. It's the Fed as well. The last statement by the Fed chair Yellen was relatively dovish, and you know, while many people expect a rate hike in September, we're not that convinced. I mean, there's a chance for it, but we have a low conviction on that. It could just as well be later, maybe even next year. So we get a bit of a delay there as well, and that of course benefits emerging markets also via the fact that the dollar will not strengthen a lot in the next few months, and I think that will certainly be positive for emerging markets.
Hans, so good chatting with you today. Thanks much for taking time out and speaking with us on
pleasure.
ET Now.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.